Hello, I'm Hickey from interest.co.nz and welcome to an economic weather report brought to you in association with ASB. I love to have a look at the stats on our trade to see what's happening with our imports and exports. It's a basic measure of how successful we are, what's happening with our economy and what might happen next. We've got some trade figures out this week showing that imports are actually falling faster than exports, which helped our trade balance a little bit in October. However, we aren't seeing the gains that we saw through the early part of this year when the benefits of the lower currency last year flowed through into revenues this year. Now, with the currency back up again, this is hurting our exporters, making it difficult for them to earn New Zealand dollars at least, and volumes are still well down because of the global economic recession. However, it's worth digging a bit deeper into these figures to show what exactly we're exporting and to where, and what we're importing, just to give us an idea of what's really happening with the economy. Well, obviously imports are down substantially. It's largely because of less investment in machinery by various factories, particularly manufacturers, who are struggling, some of them exporters, to get sales overseas. Also fewer vehicles, so we're not buying so many cars. That has to be a good thing from a debt point of view. Meanwhile, in the export side, we're seeing less oil revenues and less dairy revenues, because prices now at least are lower than they were a year ago for both oil and dairy, and that's a factor. Exports to South Korea and Japan have been hit the hardest, but exports to China up 54% in the last year, so obviously the free trade agreement is helping. Now, in terms of the makeup of the imports, obviously we've heard about oil being down because of the oil price and cars being down because we're buying fewer cars, but also we're seeing less fertiliser imports, partly because the price of fertiliser is based on the oil price, but also farmers who have been tight for cash lately are not buying that fertiliser to put on their farms. So there we have it. The overall picture is that our trade deficit, although it has improved in October, is not as good as it was earlier this year, partly because of the high New Zealand dollar. And when you look at the makeup, it shows that we're still spending quite a lot on consumer imports. The real problem was that we're just not investing in our machinery. And on the export side, we are vulnerable to moves in both the oil price and the price of dairy. I'm Hickey. That was a special economic weather report brought to you in association with ASB.